Hey, what's up, y'all? This is the 23% retracement strategy that I'll use. This is the Euro Japanese Yen. All right, so we had this nice little rally up. All right, and so I want to look for some pullbacks, and I want to look for the 23% to be crossed, which we did get this a little price action right here with this wick. Then we came back above. They gave me a signal that I'll be looking to take this down to at least the 61%. It's the first level, and then all the way up to the 78. We did get this. I was able to book around $497 off of that particular trade. Entry back up here, so it's pretty good with 49 pips to that area, and right now it's dropping all the way down to 77, 76 pips. If you hear some noise, it's my nieces and nephews running around. All right, but boom. All right, the 23%. It's one of my favorite go-tos. That's how I'm able to have a high percentage of wins as well too. A lot of you do know that I also trade the double bottoms and double tops, but for the most part, double bottoms, double tops, and uh, the Fibonacci retracements. That's my bread and butter. That's what I do. All right, I feel real confident about them. Also, also do liquidity grabs. All right, so what is that exactly? All right, so you see there was a lot of shorts, a lot of people going short, but this liquidity grab came in and knocked them out the market. So let's go look at that over to my Forex. I'm sorry, my FX book. Yeah, let's get all this. All right, and we were on the Euro Japanese Yen. All right, what do you notice? All right, 81% was short, but only 19 long. Remember what I told you guys. Eventually, the shorts do work out. Um, well, retail investors are typically early, but they are 100% correct most of the time. We're not even 100%. I mean, majority of them are correct. They're just early, so we want to delay that. All right. So yes, it's probably going to go short, but you're a little early, and you're going to be liquidity. And then we'll look what happened. We get this move where all these guys are short. All right. They just building. They're like, I know it's got to drop. I know it's got to drop. All right, it's getting these drops, it's getting down to these levels, and it's pivoting. Okay, well, this was a liquidity grab, right? It wiped out all these shorts over here, which we saw was what 81 right here, 81%. If you can see on the screen, right? All right, 81%. I can just go ahead and click on it so you can actually see. So right here, so actually 82%. So 82% on the screen right there was short. You know that if they're going to be short like that, they have to what that means that they're providing liquidity, and that means that gives access to somebody to actually buy. So if you keep that in mind, you always want to approach the market and ask yourself, "Am I liquidity?" That will really help you understand. All right. I saw this flush out. Um, I first was starting to get a little worried. All right. Thinking that because I did have another position on right here. So I actually added it into a second position. All right. When I got this drop, when I started seeing these red candles form, so okay, well, we ready to now to drop, and then we got this price action. I was a little bit more patient. I said, you know what? Let's keep this in play. That's really a perfect liquidity grab. Boom, we got it. Now we're back in this area again. What can happen now? We still can do another liquidity, meaning that you got all these people who went long. Now they're trying to close out on these shorts as well too. We really want to see how price is going to react to this area as well too, because a lot of people can start going short, and they can provide some liquidity because we could come back up here and revisit these levels for a retest before ultimately going lower. But for the most part, I like this price action and everything that's happening right now. Um, all these people who went long, they're now getting squeezed out as well too. All right, so if you really approach the markets and really understand this dynamic, you start seeing things a lot different. Okay, I'll give you another example. Right now, if you were to enter in this market and you say you're going to go short, it makes no sense for you to ever go short at support, and it makes no sense for you to ever go long at resistance. Get what I'm saying? So let's go through the chart. We can look at plenty of opportunities. All right. Um, Now that doesn't mean it's not going to happen, but why would you go long here? There's really no sense. You're at some resistance level. Go probably look to the left. You get some resistance levels. All right, you back up here, and what we call a supply area. Why would you just go ahead? Why would you just like go long? It doesn't make any sense. If anything, you go short, and it's short lived because what we can short it back down to some areas that was broken. If anything, you want to go long on retests or potential breakouts. So this was a what breakout. As soon as you see the breakout, a lot of people you're not at your computer at the breakout. You don't see it. So there's nothing you really can do. But if you had these levels marked out and you had some limit orders or something like those, some stop orders, yeah, that make it happen. But that's one of the rules people can do is say, listen, why would I short something at support? And or why would I buy something at resistance? All right, you need to see something powerful to come in and violate an area. Like right now, someone has came in the market and literally tried to short right here. Look what happened. We got these rejection candles that are forming at that level. Why? We do feel confident that this is going to eventually change. Sorry for all the background noise with all the kids, but look, so look, all right. Why? Somebody literally, oh, I missed the boat. Let me go short. Why? Now you're getting tore up. For what? It's already 16, 15 something pips going in the opposite direction. Same thing here. Why? Somebody went long. Why? You look over here to your left, maybe going a higher time frame, you're probably going to see something else over there. And lo and behold, look where you at. This was a what? This is a supply area. Look at that. Look where we back at. So you got to be aware when you look left, what other levels are in play. Even if you were shorting this, what is a good area to get out? Right here. Why? Because this is a demand zone. Price has found footing in this area, and it's showing that there's some buying pressure that's sitting in those areas. So therefore, we want to respect. Why is not sticking? Let's see if this works. All right. So yeah. All right. So this is an area, and we need to see price what violate that particular area and potentially come back up here and retest before we start even entertaining that we possibly could go even lower. But play level by level. It's even better if you go on a higher time frame. You're able to see things a lot more clear with your setups. See now it's a lot more clear, right? Look at this. Look where we at. Look where price is sitting. Look at this wick rejection area. Something big took that price out of that area. If you stick with risk management, sticking with a strategy, and doing it over and over, you'll be fine. Let's go ahead and pull up these where the double bottoms and tops are already on here. And I already told you guys before, if you do stocks, you go over here to FinViz, boom. You got that. It's telling you, it's giving you some double bottoms and doubles. Well, this is the double bottoms, but you can go down, drop down. You can do your double tops, so whatever you want. All right, I prefer to trade double bottoms and stocks because if you want to be one directional, I don't like shorting stocks, and you can take out some puts, but if you just try to specialize in one direction, sometimes that helps you. It's because now you're not looking for shorts. You're literally training your mind to look for longer opportunities, and you can get that. So think of it like that. And if you gotta look at the stock market as a whole, it's really one of those juggernauts that's meant to go up more than to go down. So you also will get that as well too. But that's just a strategy that I use. Whatever. I don't like really, like I said, I don't like doing a lot of shorting in the market or through puts or just regular shorting. But yeah, you can go to FinViz and give y'all the answer to the test, man. Y'all gotta get out of your own mind and get out your own way. All right. And keep it's really, really simple, guys. Um, you can go any. All right. So where we at now on this one? We got this what? This is an impulse. Got an impulse. Look what happened. We did what? We on a 4 hour. We crossed 23%. So guess what? Now, since we crossed it, now we're back above, and this is on a 4 hour, so it's a bigger time frame. But what I'm looking for now is the price to get down to the 61% back in this area. Now look what this area. What do you notice? You notice it's a what? This is a consolidated zone. It's sitting right here in this area. Trying to take this off. Right? Sitting in this area, and we're gonna do this. We know that this is a what? Demand zone. Price broke out of this particular zone. Now, yes, you can go down to the other Fibonacci retracement levels. All right. But I like the 61. I like to keep it simple. I don't like to go for home runs. I mean, that's just how I play the game. And for whatever reason, let's say we get back up here and retest this area, and then we get a drop. I mean, we're talking about riffing this zone, 197 to 177 pip drop. I take that, right? See, that's what we got on the chart. And it's my double bottle. Okay, they on here, right? Now, look at this. This didn't pick it up, but this could be considered a zigzag double bottom. Let's see if it picks it up. All right, so it did on this one. So you see here, we have a zigzag. So if you would have had this indicator on, you would have had the zigzag, and bam, we got this push up. Targets are already hit. It's pretty good. So, like I said, just sticking with the same setups over and over and get out of your way. I already got targets already hit on some of these I had. All right, double tops. We had a zigzag double top, and this is a higher time frame. I think a lot of you will do better with higher time frames because it counts out the noise and you get better pips. And it's better for you guys who don't have time to be going in the market. Like some of you gonna look at this video, you're not gonna look at it probably right now. You probably gonna, it's later tonight or tomorrow. It's Friday. Probably at work. You're doing something. That's fine. Okay. But here's the answer to the test. The market is designed for you to stay in your emotions. That's what it wants. It wants you to be irrational. Look at all these. Look at all these double tops that's hitting out. These this is a couple of days ago. Probably this is on May the 3rd, but it was last week or 2 weeks ago. But you see it playing out. Targets hit. It's good. Watch this. Let's see how much that is. Now all the way down to the targets. It's 535 pips, guys. So imagine from May 3rd all the way up to roughly Wednesday, 500 something pips move. And if you just did a simple $3 lot size, you just made over $1,500. Maybe risking 150 to 200. Because you know we always say what when you go to the double tops and bottoms, you want to set it what 30 pips above. So this is about 33 pips. So this is where your stop loss would have been. Stop loss did not get hit. And if we're just typically we trade to what? The neckline. Right here, the neckline. So that's 265 pips. So 265 pips times a $3 lot size, you're talking about what is it? 265 times three. That's $795. And then you would have made that from May 3rd to May 5th. By that Friday, you would have made that. Playing this play. So, and it's the Euro Canadian dollar. I don't know what else to tell folks. At the end of the day, it's not about the strategies. It's really about you mastering yourself and who you are and what you're doing. But the self sabotage, it is killing a lot of folks and it's getting ridiculous. But at the end of the day, you can't say that nobody didn't help you. You can't say that the information is not out there. It's better teachers than I am out there. It's better traders than I am out there. All those things. There's no excuse. You can either go pay $15,000 for somebody to show you something that maybe blow your mind, or maybe you look at it and say that was a waste of time, or you can go on YouTube, you can find something for free, or you can hire somebody and want. It don't matter. Shoot, I did a trading group for $75, and yet people still find it difficult not to do what they're supposed to do. You got to put the work in. You got to keep pulling the trigger. You got to do the work. You got to understand why are you blocking who you are and what you're capable of doing. That is simple. This is it. And we're gonna keep preaching that and preaching that and preaching that. But don't be shocked when people start really, really opening up, they're putting into that premium, and then now you're like, oh snap. No, stop doing that now. When people out here really trying to get you out of the game, a lot of y'all really, really not putting in that work. And you know what's crazy? Even though I know a lot, I still too get lazy. This week, I probably could have really crushed it even more. Some trades I didn't take. I didn't, want to do some other stuff. And that's part of being human. So guess what? There's some things I have to challenge myself to say, hey, what do you need to do, Eric, to take it to the next level? But look, y'all have a great weekend. I'm out. Y'all be safe. Hit the like button, subscribe. It's your boy, E. White. I'm out.